Hello, friends. So we have seen elections getting concluded in four major states and one northeastern state. Elections in a democracy are always a major event because they set the tone for the policy framework and the continuity of policy, and that's why these are always very eagerly monitored, analyzed, while the results have cheered the market because it gives clarity for the 2024 general election. Uh, at the same time, if you look at the economy, continues to do quite well. The macro indicators continue to suggest a robust growth. The September quarter end GDP data is over 7%, which is higher than the market consensus and estimates. RBI also, in its recent monetary policy, has indicated a 7% growth for the full financial year 24. Um, with that, if you look at the corporate earnings, are also reflecting the same, and we are seeing a decent revenue growth across, especially if we talk of banking, lending, financials. We talk of industrials, some consumer discretionary. The earnings margins are quite strong. Something like IT, smaller sectors like chemical, FMCG, they continue to drag. But overall, if you look at the profitability of Indian corporate is increasing. Uh, PAT of listed corporate as a percentage of GDP has gone to 4.7%, which is highest in the recent times. If you look at the ROE of the companies of Nifty 50, it has gone to 15.9 after this results, which is highest in last 10 years. So that gives us an indication that while the economy is doing well, uh, the earnings are getting influenced by it, and with that, the valuations are also looking quite orderly. Uh, though RBI remain concerned about inflation, but at the same time, this is the first time after long where the RBI has shown some concerns about not tightening too much in order to protect the growth, which give us an indication that maybe we have lived through the entire hike process, unless there is some geopolitical or a global issue which emerge. So essentially, what we are saying is that the rate hike seems to be over. However, the inflation projections by RBI still remain high. So next year, RBI has been talking of over 5% inflation to start with in the first quarter, which actually pushes the uh, rate cut possibility far into next financial year. With that, I think the risk reward is more favorable towards the middle part of the curve, and that's where investors should look at it. But overall, if you look at from the macroeconomic market stability, whether equity market or fixed income market, we believe that right now there is no emerging risk to be worried about. We are just ending the quarter in few weeks from now, and the market will be eager to look at the earnings going forward for this quarter and the guidance for the next quarter, and that will determine the course of the markets going ahead. With that, thank you very much.
Mutual fund investments are subject to market risks. Read all scheme related documents carefully.